What's up, everybody? James here with myself Invested, helping you make the best investment, which is in yourself. On this channel, I talk about crypto, stocks. So if you like that stuff, make sure you give it a thumbs up on this video. Plus, if you want to see more, hit that subscribe button. All right, let's jump in right now. We are taking a look at the SP 500, waiting to see when this could possibly break down. Yep, breakdown. I do believe that the S&P 500 is going to break down in the next couple of weeks or so. Why? Because we are forming an ascending wedge pattern here. So as you can see on the weekly time frame, I've got the upper bound of this wedge, I've got the lower bound, and we are forming this wedge pattern. Also, we could take a look at the MACD and see some slight, ever so slightly, we have some bearish divergence. This is almost textbook, what I would call it. I mean, sure, there's more perfect patterns, but to be able to spot this on the weekly chart for the S&P is pretty good. And so it could be a situation where this continues inside of this range for a little while, maybe comes back up to the top, and then we get it to come down. There are instances as well where we'll get this bearish pattern, but then it'll break to the upside. So we have to be cautious and make sure that we're doing proper trade management, money management if we're taking trades on this setup. But from what I've seen, it's a higher probability that this does break to the downside. Now, right now we're kind of testing this lower support line, but it could come back up and then down. I mean, this would be pretty early inside of this entire pattern to break right here on this candle. I mean, it's only maybe halfway, not even halfway complete. And a lot of times these patterns don't develop all the way through to the end. I mean, they don't go all the way to the apex of the triangle, of the wedge, of the pennant. But we have enough price action now where we can see what it's doing. Usually we'll have at least 2 tests on the upper and then 2 tests on the lower to even be able to spot this, but then especially before we get a breakout. So let's draw a couple of Fibonacci retracement tools. All right, so the first one from this low of this wedge up to our current swing high. Looking at the golden ratio here, the 0.618 level, and this kind of coincides with some of this support / resistance that we had back in September. And a lot of times these wedge patterns will either, and I guess it depends also on where you draw this line, because technically we could draw it like this. This is a little bit narrower, or we could draw it something like this. But at the least, I would think that price would come back in this. This is a bearish pattern. Price would come back at least to this level, kind of towards the start. Could even come down here as well to the actual start of this pattern, kind of the bottom corner of it. But it's interesting that the 618 level is right near this prior support / resistance, and also where we had kind of our first low inside of this wedge. I'm also going to draw another Fibonacci tool. I'll keep that one on there, but I'm going to draw an inverted Fibonacci tool. Let's see. And let me actually delete this one so we could see it a little bit better. But what's interesting about this one is that on the extension, we have price coming to the 1.618 as well as the 2. I mean, it tags both of these pretty nicely right here. that we had in November, and then also just recently in late December, early January. Before it really made a case that we had some bearish divergence here. We had a nice engulfing candle on the following one, and then we're now testing the lower bound of the wedge. And so it's interesting that we had price extend to the 1618 and then the 2 level before turning back around. And then where does the 618 level put us? Well, it puts us right there where we had that prior support / resistance. This was also where we had, this is the same area that we have the retracement on the entire wedge itself, the 618. Oops. So we could see that this could be a very potent area for price to revert back to. So this is exactly where I'm going to be looking for price to come to. I'll probably put in some limit orders around this area, around 4,500 per for the S&P. At that case, I would also look to find some support, maybe on the daily time frame. I would look for price to find some support. That way we can capitalize on this dip that we might be experiencing. And one thing also, we have the 200-day moving average coming right here. So potentially, I mean, we could see price kind of trickle its way down, tag the 200-day moving average right near the 618 level. That would be a lot of confluence. That would be a high probability trade, because the last time that we went below the 200-day moving average was in 2020, in the pandemic crisis that we had, and kind of the scare that the whole world was under. So I would say that if we do get price falling some more and we tag this 200-day moving average, I would look to add to my position. But then shortly after, I would make sure for confirmation that we had some support. I don't think that we're in a crash mode yet, but if we do fall below and have closes below the 200-day moving average, then we could be looking at a more macro bearish scenario, and that would be definitely something to pay attention to if we get to that point. So that's all I got for this video. If you found it helpful, make sure you give it a thumbs up. I really do appreciate you checking in on this. If you want to see more videos like this, don't forget to hit the subscribe button as well. Check out some of my other videos that I do in crypto. I'll put that at the end of this video. Until next time, this is James with Myself Invested, helping you make the best investment, which is in yourself.